$150,000 by the end of the year? No. I'm just going to say a flat no. I think 100K is possible to hit as a high this year. I don't think that 100K is the top, but I believe that $100,000 is going to be an extremely difficult price point to break above.
Bitcoin has retraced from its all-time highs, now hovering around $60,000 to $64,000 a coin. Where is momentum headed next? Is it poised for a huge rally or a collapse? Well, it looks like it's stalling and waiting for a breakout either way. So we'll talk about what's next with our next guest, Aaron Dishner, co-founder of the Better Traders, and we'll be talking about not only his outlook for Bitcoin, Ethereum, and the broad crypto markets, but also how to use bot trading. Very interesting trading tool. Yielded very good results for Aaron so far. Let's talk about it. Aaron, welcome to the show. Good to see you.
Yeah, thank you for having me on, David. It's a pleasure to be here.
Well, it's a pleasure to have you. Let's talk first about some news hitting the crypto markets. The Ethereum price, which we'll talk about in detail today, well, that's already kind of factored in, would you say, the ETH news? Now, as you know, May 21st was a huge rally. I think up like 20% on the day or something huge. I think the biggest single day return since many years ago, Aaron. And now it's just kind of been stalling, waiting for the next breakout. What's going to move the next, what's going to move the price? What's going to propel it to either a new high or a new low at this point, Aaron?
I think having the recent appeal by the SEC and their stance towards Ethereum is definitely going to have a positive impact on the price of Ethereum. That happened in the last 24 hours, and already Ethereum has pushed up higher, and it's actually outperforming Bitcoin just by a small margin. I do believe that Ethereum will have its day, but it still has to move up above $4,000. That right now is unfortunately, it's the big line of resistance that it's been struggling to get above for months.
Now, the Ethereum price has been trailing up all year. Has that been more or less following Bitcoin and the tech stocks, or do you think it's moving on its own?
No, I definitely think that it's moving with Bitcoin. I kind of think of Bitcoin and Ethereum as like rubber band buddies, where we'll see one extreme move for Bitcoin, and then all of a sudden, Bitcoin will stall and Ethereum will try to catch up to it and maybe overshoot a little bit, or vice versa. I mean, going back to that date, May 20th, May 21st, when Ethereum had that positive news about the ETF approval, Ethereum shot up, I think, 20% in a day, like you said, and Bitcoin followed, but to a much lesser degree of like 8 or 9% in a day. Still a big day for Bitcoin, but they are definitely correlated. So I think that Ethereum's kind of been trailing behind Bitcoin instead of really leading Bitcoin's rally because of course, the spot ETF for BTC.
Okay, so at this point, are you waiting for news to move Ethereum, or do you have charts that could indicate, or indicators that could show us where the price will move independent of news?
I think we're still waiting on news right now. Although I have been seeing lots of reports that the exchange balance of Ethereum has been dropping significantly across major crypto exchanges. If you look at a couple of charts, if you don't mind me sharing my screen.
Please.
So making things really simple, and let me hide a little bit of this just to make it super duper easy to see. The price has been really stagnant. It's been quite boring for a while. And we have this significant level of resistance up here. You can see it's highlighted by these red dots, which is an indicator I use called the TBO, the trending breakout indicator, and it's automatically plotting support and resistance levels. As long as the price is inside of this green area right here, this basically is telling us that we are going to be experiencing some bearish consolidation. However, the price, as you can see here with the Fibonacci retracement levels that I have, it has successfully bounced off the 786 level right here, which is a really great sign. The fact that we didn't plummet down here to $2,800 again, like we saw in last month and in April, is a really positive sign for Ethereum, considering that Bitcoin had that minor pullback, but it was major for alts. So again, it's the big challenge for Ethereum right now is, can it break above the cloud? And you can think of this cloud really similarly to the Ichimoku cloud. If you've ever used that indicator or seen it before, it's quite similar, except this is more based off of combined moving averages. So if we can see Ethereum push up and up and up, and especially get above this level of $3,800 and of course 4,000, then it's going to take off. It's going to go way higher.
Well, let's take a look at Bitcoin now. Let's take a look at the Bitcoin technicals. So you've got TradingView open already. Now, like I mentioned, the opening, it's already retraced quite a bit from its all-time highs, and it's been kind of consolidating. Is it waiting for a breakout pattern, Aaron, or is it? Do you think it's already, the momentum's already been baked in?
Well, I think the spot ETF and the anticipation thereof back in October 2023 really pushed the price of Bitcoin up too high too fast, and we're kind of reaping what we've sown. So much anticipation, so much excitement. Then when we finally had the ETF launch, the price of Bitcoin dropped. Like it's that's normal for BTC. It's been really boring to watch BTC lately, but that means that it's also been good for trading, because this is how we make our money, especially with bot trading. When we have sideways action and what I call negative price action, it's actually really good. But to make things really simple here, just working off of support and resistance levels, we essentially have a wedge here, but this wedge is breaking to the downside, which isn't good. We have this long-term line of, support right there
Yeah.
that's been established for months and months and months, and it was broken yesterday, and it's confirmed broken today. So the unfortunate truth is that I think that Bitcoin could still drop a little further. My target personally is looking at $61,000, which actually works out really well in regards to this indicator where we have this lower line right here, this lower moving average, which is currently at about 61,675 bucks. But I think the momentum is already in for BTC. It should be going lower. However, it's still bullish in my opinion. All of this price action right now has been really choppy. The chop is on purpose. The chop is to shake out the weak hands. So it's painful. And we've also seen that Bitcoin dominance has remained really strong while others' dominance and stablecoin dominance has been increasing. So it puts pressure on the market, especially for trading alts. So it doesn't make it easy to trade, but I do not think that the top is in. I think that Bitcoin will get out of this range even as soon as the end of this month, to be crazy, and put something bullish out there. But I am expecting Bitcoin to move out of this range. There's also an incredible level of short sellers. And last time I checked, it's about $3.7 billion of short sellers right above this level of $72,000. The last time we saw something like that happen was back here on the 15th of May, and we could see what the price of Bitcoin did. Moving up 7% in a day for Bitcoin is massive. So whenever we get these levels of basically short sellers and there's just this wall of liquidation at a major price point, that's a target. It
Yeah.
might take some time, but that target will get hit, and then it will help to propel the price of Bitcoin higher.
Well, let's take a look at how bullish you are exactly, Aaron. I'm going to read you a paragraph from CoinDesk. This is an analysis from Standard Chartered Bank. I'll just read
Mhm.
you the first two paragraphs. Bitcoin remains on track to touch the aspirational $150,000 level by the end of this year as spot BTC exchange traded funds continue to see significant inflows. This is a quote from their head researcher. I am sticking with my end 2024 150K and end 2025 200K forecast for BTC. Before then, if tomorrow's payrolls data are friendly, this came in a couple of weeks ago, I would expect a fresh all-time high to be reached over the weekend. Well, that didn't happen, but this is his next prediction. As we approach the U.S. election, I expect 100K to be reached and then 150K by year end in the case of a Trump victory. Okay, could you evaluate those statements?
Sounds like someone's been active on crypto Twitter. Good grief. I didn't realize that big institutions would have such permables working for them. Wow. 150K by the end of this year is egregious.
That's more than a doubling from June
Yeah.
to the end of December. I mean, it's done that before, but I'll get your take.
It's done that before, but the last time that really happened, the big bull run we saw back in 2020 was honestly thanks to all of the money printing and the stimulus checks. People were looking for alternative ways to make a living, to earn some money in the stock market and in crypto. Bitcoin fell famously back here in March, 60, 70% over a couple of weeks, down to $3,800. Don't you wish you could buy some again at that price?
Yeah, just
You're not going to see that
time
price
machine.
again.
That's what we need. Yeah.
Yeah. But even during this time too, and I think this is where we are right now, we're just in this period of sideways chop. And yes, once we saw things get really exciting, we saw the price of Bitcoin increase by 300%. Like it was an amazing rally. Now, $150,000 by the end of the year, no. I'm just going to say a flat no. I think 100K is possible to hit as a high this year. I don't think that 100K is the top, but I believe that $100,000 is going to be an extremely difficult price point to break above. And it all comes down to trading psychology and crowd psychology. It's a lot of zeros. If you think back to the top in 2020, I'm sorry, 2017, December, Bitcoin couldn't even hit $20,000. It was so close, like 19,800 something on dollars, right? The last market we had, Bitcoin moved all the way up to 63, 64, fell down, and it made another rally up to 69K, not quite $70,000. You kind of get where I'm going with this. It's a lot of zeros. So having a price target of $150,000, it's like, no, take it down to 100K. $100,000 is going to be really difficult for Bitcoin to break above. It's just an easy number to just go 1, 0, 0, 0, 0, 0 when you're putting in a sell order. It's psychologically massive. And there's actually Fibonacci extension levels, which project where the price could find future resistance literally right at $100,000. So again, this is where I struggle with 150K. Like, I don't think so. I think it's
What
more
was the
realistic for
sorry,
100K and then not even to hit 100K, but probably 97, 98, and then have a significant pullback from there.
just because it's a psychologically important 100K round number, Aaron?
Because it's a psychologically round number and because it's a Fibonacci extension, which is
Mhm.
plotting a future price target where there should be a pullback, which has worked many times in the past.
What was the psychological significance of 74, 75,000? It's retraced several times to that level and it's just not
Hmm.
broken out to 80,000.
Well, again, we're using these fibs. Now, it doesn't have to be the exact like pinpoint price,
Yeah.
but having these two levels here, I mean, $69,000 was the previous high. So it makes sense that the price is pushed all the way up and pushed a little bit above the previous high, but not to a significant degree. We've seen so much struggle just above the previous all-time high, which also correlates with a historical Fibonacci extension level from 2014's market. And this has worked consistently even in the last bull run that we saw in 2020. So it doesn't have to necessarily be the exact price point. So we could see Bitcoin shoot up a little bit above $100,000 and then pull back. But again, those round numbers are really powerful.
I'm looking at a market betting site for who's going to win the election. So this is Poly Market for crypto
Mhm.
traders. Donald Trump currently has a 56% chance of winning according to bets placed on Poly Market, again, mostly by crypto traders. Joe Biden at 33%. It seems to me that the crypto market, at least, is more hopeful for Trump victory. Why is that?
I think because, mm, well, not every crypto investor and trader is the same,
Right.
politically speaking,
Sure.
right? But I think there is a not a big number, a large number of crypto investors and traders that are more into the aspects of freedom that Bitcoin provides, the aspects of decentralization, about
Mm.
having it be sound money compared
Yeah.
to money printing. And I believe that, or rather, I would assume that people that are voting for Trump are looking at him and his past policies and just the way that he gets business done and having those philosophies, that way of work with Bitcoin together, I think is a really
Yeah.
natural marriage where not to say that Bitcoin is brash and going to make all these crazy decisions and scare a lot of people, but that Bitcoin is going to push forward whether or not someone in power is going to want it to. And I think if someone is going to support that and has a better history, a better track record of supporting innovative technologies, it would be Trump rather than Biden, who's been putting all these people in office to suppress Bitcoin, to fight against Bitcoin, to sweep it under the rug or compare it or make it up to be this terrible thing like Elizabeth Warren talking about how Bitcoin has been in cryptocurrency has been used for money laundering while she turns a blind eye to all of all of the money laundering that's happening with their own
Yeah.
US dollar. So
Yeah, well, they can control a blockchain. They can't control, cash being used to launder money. So I certainly understand what you mean, Garen. But let's just take a look at government attitudes overall. Do you think there's a shift towards more pro Bitcoin or crypto policies over the last couple of months? First, the ETH ETF was, well, actually, no, first the Bitcoin ETF was approved last year. Now the ETH ETF is being approved. Now let's just take a look at Donald Trump. A couple of years ago, he literally said, and on Twitter as well, that
yeah.
he does not like Bitcoin. Like it was pretty clear about that. Now he's saying he's going to oppose Elizabeth Warren's goons. He used that word.
And I will also stop Joe Biden's crusade to crush crypto. We're going to stop it. I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders. I say this with your vote. I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency.
Now he's saying he wants all the Bitcoins remaining to be mined in the US. Like, what's going on?
God bless him. I mean, he's trying. I'm laughing just because like that. Yes, it would be great if Bitcoin is mined in the US, but that doesn't really it doesn't mean what he thinks it means. But I think that Trump is changing his tune quickly because he's in a desperate position. He does have a decent chance of winning the next presidential election, whether or not people want him to win or not. And I think he's doing everything he can in his power to attract as many possible voters as he can. And Bitcoin and cryptocurrency has been this sour apple in the bunch that no one wants to touch. And now all of a sudden it's become the golden apple that everyone's looking at the promise, looking at the technological advantages that it has over the dollar, even though they don't want the dollar to be undermined. But to be honest, I just can't trust anybody that changes their tune this late in the game. Now, if he had been pro crypto, pro Bitcoin years ago, then it'd be like, okay, well, this is natural. But this is also, I mean, par for the course for lots of politicians to change their tune when it gets closer and closer to the polls. Whereas like RFK has been talking about Bitcoin for quite a while in his campaign trail. He's been pro Bitcoin, pro democracy, pro self-custody, things like that.
Poly Market is assigning a 1% chance of an RFK Jr. win. Okay, Trump also said that he will ban. So, yeah, I mean, the odds are the odds. Trump also said that he would ban CBDCs. What's your take? I want to get your take on this, and we'll come back to Bitcoin Technicals. What is your take on whether or not CBDCs should be banned?
Well, I think they definitely should be banned. I think that it violates the First Amendment. I think it violates a lot of the rights of the American people to have privacy from the government, for the government not to know every single thing that you buy. And it's bad enough that supermarkets force you to get a point card so that way they can track your purchases to figure out trends and things like that, or what they should stock their shelves with. I mean, it's clever when it's a privately owned business, but when it's the government, it's a different story. And yeah, giving them so much control over our money is a terrible idea. I mean, just think about China's credit score system. If you don't pay your taxes, you get your bank account closed. If everything is stored in dollars, then you are basically under the authority and the regime of the United States government. Whereas if we keep things the way they are, people can still be trusted to pay their taxes as they're supposed to. People can still be trusted to find offshore and onshore investments, just like we've always done, and things have been fine. So there's no need for a CBDC to go through. It only makes things worse, and it makes the United States government look more like a communist regime, in my opinion.
Okay, strong words, Aaron, but I'm just going to play devil's advocate. Wouldn't you be looking forward to a more efficient commerce system, which is the argument for the pro CBDCs? Wouldn't you be looking forward to instant settlement over the blockchain instead of waiting hours, if not days, for your bank transfer to land?
Well, yeah, of course, but I'm talking about the blockchain where it's open. I don't want the United States to have anything to do with putting their money on the blockchain. We already have services. Like, it would just make more sense for them to integrate what's already been built instead of try to make their own system on top of what's been built. It makes way more sense for them to employ developers that have been working on the blockchain, specifically with Bitcoin, to figure out, how do you do this? How can we integrate this to make the United States dollar more transparent? I'm all for transparency, because that means that the government can't just pass this X trillion dollar bill in 2 hours that's like 500, 600 pages. It's like, no, having more transparency is great. But when it comes to them controlling who's spending what and saying yes or no to certain transactions, that's taking it too far.
Okay, let's go back to the Bitcoin technicals. I want to just zoom out a little bit, Aaron. If you take a look at what happened the last time we had a high, which is 2021, the market had a double top and then immediately crashed by the order of 50, 60%.
Yep.
Right? I mean, does that look, eerily similar to what's going on right now, a double top and then a reversal? Like, is this like a head and
Hmm.
shoulders pattern on a longer scale? I mean, just zoom out and do a comparison from the top. Doesn't that look similar to you?
I know what you mean. Actually, let me go to the weekly time frame. That'll be a
Yeah.
little bit more clear. So you're talking about this specific double top right here. So we have this wick and this wick up there. The difference between this period and where we are right now is time.
Okay.
This double top here, or rather the first top in April, we had the next one 210 days later.
Mm.
For double tops to be really strong, in my opinion, there should be a significant amount of time between them. The longer the time there is between them, the stronger they are. I mean, you can see the first test right here. This was not 210 days, it was 189 days, 27 weeks. But as soon as the price came up close to this high here, established just at 65K, there was an immediate rejection. So we're not seeing anything to that scale, in my opinion, right now. We're still like in the baby stages of something like
That's
that.
kind of a small double top, like a baby double top, right?
Yeah,
How many
I
days did that pass before the last top was reached in February? It's a couple months, not even 3 months, Aaron.
back over here.
No, like if you take a look at this here, right? Just take a look at this here. So it reached 75 in February and
Yep.
then it retraced and then it went back up. So does that count for you? Or is that just one top? Like, is that too short a time frame?
It's too short a time frame for sure. This is just normal price action. Actually, there's a really interesting theory in regards to BTC price manipulation and this
Mm.
idea of 20% pullbacks. It's a really messy chart, but I'm actually going to start with where we are right now. And what's been happening, and we can trace this back all the way to the start of 2023, that there's been this consistent run up and then there's a decline of around 21 to 23%. And the length of time it takes to recover has varied, but we can see it consistently happening, making a new top, falling 23%. Back over here, making a new top, falling 21%. It was a significant pullback. And 21% for BTC, that's a big, big, big reversal. Back here in the summer of July, last year, 2023, 21% pullback. Here again, 20% pullback. Here again in March, when we had the banking crisis, all the attack on Silvergate and all the other crypto-centric banks, price fell down about 22%. So given that this has happened so many times, I know the price is not recovering yet. It's taking forever for the price to recover. And I deem a recovery hitting the previous high, which is at about $74,000. We haven't seen that yet. I still believe that this was it, and this will be the pullback. That was that. So it's just taking a super long time for the price of Bitcoin to recover, to actually push back up to 74K and beyond. So I'm not really worried about this being a double top or a head and shoulders or anything like that. I think this is just chop. This is the price of BTC moving up too high, too fast with a lot of excitement because of
Yeah.
the spot ETF news. And now we're just
What
paying the price.
what is the floor for you? In other words, a
Hmm.
point in which it breaks down, and then below that floor, we're in a confirmed renewed bear market.
Oh, well, that's a good question, actually. If I'm going to do that, I'd probably have to use my fibs, and I would say breaking below 40K because we have two complementary 618 supports, which is the golden support level for Fibonacci. And also going inside of this cloud would also be incredibly bearish. But if we were to break below 44K, that would send us into a new bear market. That would be unprecedented. I don't expect another black swan event, but that's not how those things work, right?
Yeah.
But seeing the price shoot and stay down below there, that would be disastrous. That would mean the market is definitely over and we're going a lot lower. But that again, that would be very irregular and very strange because it is an election year. The markets are much more bullish. Everything is trending up, or rather, Bitcoin is trending up higher. Stocks are trending up higher. Bitcoin and crypto, of course, are more of a risky asset compared to more traditional assets, but still, there's so much promise. While Bitcoin could fall down anytime, it's true, to like 40K and below, and that would definitely be incredibly bearish. I don't foresee anything like that happening.
Interesting. Let's say barring a broad market sell-off, right? But that's more of a macro issue.
Yes.
Bitcoin is still tracking the Nasdaq. Well, actually, can we just take a look at what's been going on? I believe there's been a bit of a divergence the last couple of days. If you just take a look at well, just go on TradingView, and if you add IXIC as a comparison, yeah. So if you just add the Nasdaq IXIC, or
Oh,
IX rather, IXIC, and then just as the same percentage scale,
sure.
you'll get to see that yeah, in the past they've traded kind of in lockstep, and now
Hmm.
um, the Nasdaq has been trending up. You can see there, and then the
Yeah,
Bitcoin price has been stalling. So the kind of a bit of a
true.
divergence there. Uh,
Yeah. Yeah, but I mean, if I would look at this from the start of 2023, comparing price performance, I mean, it's a no-brainer that Bitcoin is still up 279%
I
compared to the
understand.
Nasdaq up 66, right? But yeah, I have noticed that too, where there's been a significant correlation in the past in regards to the Nasdaq's price and the price performance of the stock market. Again, that's why I'm also a little bit confused as well, being a trader. Sometimes I'm looking at things going, okay, this doesn't make sense. It should be following in lockstep with the NASDAQ. It should be following and being extremely bullish because everything else is. But Bitcoin is now becoming its own beast, which is good. I'm glad it's becoming its own thing. I actually noticed an inverse reaction actually when the NASDAQ recently had a pullback. Bitcoin was actually outperforming. So maybe they're taking turns right now. But it is interesting that BTC is looking weak compared to the NASDAQ currently.
Could we just remove the Nasdaq and repeat the same exercise for gold, Aaron?
Yeah, of
So
course.
yeah, let's take a look here. This could be interesting. Just type in the gold price. There we go. Now, obviously outperformance, but actually, if you just sorry, if you go back and change the scale to do it again. So go to new price scale.
Sure.
Yeah, click that. Now you'll see a better there we go. You see a tighter
Yeah.
move together. Now that's just surprising to me.
Mm.
I don't know if it's surprising to you, but they're fundamentally different things, right? I know people have called Bitcoin the digital gold or whatever, but I mean, it's not a safe haven asset.
Yeah.
It just strikes me as interesting how it's been lately tracking gold more closely
Mm.
than tech stocks. I'll let you evaluate this.
Yeah, I have been paying attention to gold. Gold has had a really nice move. It made a new recent high, I think about a month ago, but
Yes.
the price action on gold is just so disastrously boring compared to BTC that I've actually commented a couple times. I wish that as crypto traders we could trade against gold so that way we could actually accumulate gold just like we're
Mhm.
accumulating Bitcoin using alts to trade against BTC, right?
Right.
Um, but the price of gold it's just been in the doldrums. It's been really boring to me personally. Actually, I can just pull it up really, really quick. The one thing that's great about gold is that with this indicator, the TBO,
Yeah.
we have these white dots right there. These white dots tell us that what should come next is explosive price action. And that's what we've seen on the weekly scale. We saw gold shoot up. Well, it's gold, so it's only 9%. It looks massive,
Yeah.
but it's not that big of a deal. The
It's a big
truth
deal
is,
for it's a big deal for gold, but I mean, yeah,
it
we're not
is.
comparing it to Bitcoin, but yes,
Yeah, this is like a Tuesday for Bitcoin, right?
yes, yeah.
Um, but I love the fact that the chart just looks extremely bullish. Like having this, the TBO cloud pointing up, everything is looking strong. The price is above the cloud. Everything looks great. It's just stalling.
So
And it's
that's just
interesting.
Yeah,
Mhm.
so that's
But
my question for you as a trader, given that Bitcoin and gold have been tightly correlated for whatever reason, and we can talk about that. Do you look
mhm.
at the technicals for gold and say, well, gold looks bullish, and therefore short-term Bitcoin should look bullish as well? Or do you just look at this as a coincidence and analyze both of these independently?
I always analyze them independently. I pay more attention to TradFi, the SPX, NASDAQ, Dow Jones,
Okay.
the FANG index to see how that's correlated with Bitcoin more than gold. I know that Bitcoin is deemed digital gold, although it's not really an accurate statement, but
Yeah.
it is similar. And this is really interesting. I'll have to look into this more to be honest, but I have been tracking the price of gold for a while. And I am pleased to see that it's performing well because it's gold. We want it to perform well. It's a sign of strength, but we really want BTC to perform really well because that's
Well,
that's my that's my happy playground, right?
so bottom line, you're not using gold as an indicator for Bitcoin.
No,
Okay.
no,
They just
yeah.
happen to be moving together at the same time for macro reasons.
I suppose so. Yeah.
Okay. Well, let's go back to Bitcoin one more time. Aaron, I want to talk about your trading strategy. So Bitcoin, we've talked about the downside. What about the upside? Is there an upside target in which it would look really, really bullish to you and you would see a considerable breakout beyond that point?
Yep. So we talked about this a little bit before.
Yeah.
The main target right now is $72,000 because there's a significant amount of short sellers that will be liquidated once the price of Bitcoin surpasses a little bit over 72K. The next thing that I'll be looking for, of course, is how is it going to respond here at $80,000, which will be the next stop. And then after that, how is it going to respond at 100K? So end of year target probably won't be $100,000 in my opinion. It might be a little bit below that, more around like 95 or so, and that'll be really great. But until we see Bitcoin break above 70, I would even say 73K, we're going to keep chopping sideways for a while. And this is also normal market behavior for a summer period. Usually summer's pretty boring and sideways for Bitcoin and most cryptocurrencies.
Aaron, how do you trade? It's the first time on your show. Tell us about your strategies.
Yeah, so I focus mainly on automated trading strategies, which sounds fancy, but essentially I'm using bots, which actually might sound more confusing to say it that way. But essentially what I got running is I'm using DCA bots. I've been a DCA bot trader ever since 2018, been using a variety of different platforms, and basically I've cracked the code on DCA bot trading, so much so that I've been a successful DCA bot trader. I've grown my Bitcoin balance. I've grown my stablecoin balance through bear markets and bull markets by using bots. So the reason why I like automated trading is that while I'm talking to you, I actually have bots running in the background that are generating profits for me as we speak, which is pretty cool. I don't actually have to be in front of the computer, although I can be more aggressive with my trading strategy when I'm in front of the computer. And of course, I can actively trade and swing trade and scalp and all that stuff. But the reason why I like bot trading so much is that it's an excellent complementary strategy to whatever investment strategy or trading strategy that you already do. I think that's one of the major strengths of bot trading. The other reason why I like it is, again, I've been trading. I actually started trading stocks in 2015 because we adopted a son, and I realized I need to make a little bit more cash for the future because we're just a single income home. And I, at the time, was a full-time private private school music teacher. So I needed to find something. So I looked at investing, looked at the stock market. Trying to do that from Japan was a nightmare because inevitably I would get the wrong entries, or I was just learning trading, and it was really difficult to do that. And then I kept hearing more and more about Bitcoin, and finally decided to pull all my money out of the stocks, put it into Bitcoin, and rode the market from November 2017 all the way to the current day. And through bear and bull markets, I've been able to grow my account because crypto is ridiculously forgiving and emotionally driven, which means that it's excellent for trading and it's excellent for DCA bot trading for sure.
Tell us more about this bot. How frequently does it trade?
It depends. So there are lots of bot strategies that can be used. It depends on the time frame. It depends on your settings, of course, just like any other trading strategy. So if I'm a swing trader, I'm mostly going to be focusing on the daily or the weekly time frame, and sometimes a trade will take a month or it might take a year. It just depends on your time frame. Whereas if I'm going to be a high frequency trader, scalping on the 1 minute to 5 minutes, then I should be clossing trades within an hour or at least the day, right? So there's actually a huge, huge variety, lots of options for you as a bot trader where you can build your own system. The system that I've developed, which are called the Better Crypto Signals, are ridiculous because, like I said, I started bot trading in 2018 and I struggled with the ups and the downs of the markets. And no matter how great the signals would be and everything would go, I wasn't able to actually get great bot trading signals and settings because I wasn't prepared mentally for the volatility and the strategy wasn't prepared for the volatility. So after literal years of practice and understanding how crypto works, I've developed a system that is prepared to handle drawdowns of up to 80%, which is crazy. And it'll run 100% hands-free. It actually has been back tested from January 1st, 2021 up until August 2023, and surviving the FTX crash, the Terra Luna crash, BlockFi bankruptcy, Celsius bankruptcy. The signals actually outperformed the market by an incredible degree.
Okay, can you reveal how much that is? I mean, you told me you said it's back tested. What's the performance so far?
Yeah, actually, I can show you the signals running right now for one of the trading pairs. So we have 20 different trading pairs, and you'll laugh because we actually don't have Bitcoin. And before you stone me for that, the reason why is because Bitcoin is so boring. It's almost
Okay.
like gold, where it's not volatile enough. And it's really important to have volatility when you're running signals, because if there's no volatility, then there's no action happening at all. So we're using these 20 different trading pairs here. And I'm just going to select this one, Maker. And a lot of these are available on Coinbase because I recognize that a lot of people are using Coinbase specifically in the US. So the signals are pretty slow. They're pretty boring for the most part. But that's the nice thing about them, in that they're not super high frequency. It's not overly stimulative. They're actually really great. I mean, most people were probably trading in this zone right here, buying Maker at $3,208 and maybe buying more. Oh, it's the dip. I'm going to buy more. Oh, it's the dip. I'm going to buy more. Oh, it's the dip. I don't have any more. Eventually, you're going to get exhausted. So the reason why I like the signals and created them is that it waits for the right time to place an order, and it's prepared to also absorb what I call negative price action. So negative price action is essentially when the price is going against you, but this is actually super advantageous when it comes to making more money as a trader. Again, because I'm using proper DCA strategy. So Maker has been actually a really excellent chart where we have moments where it's buying super high and it's able to buy down low. And as soon as we have a bounce in the price, it automatically is set to take profit. So it's been an incredible strategy that is not severely,
So
but
so would you
incredibly
would you
outperformed the
say would
market.
you say the bot is a scalper? Is that how it's programmed?
No, not at all. Mainly because it's running on the hourly time frame. I do have scalping bots and scalping signals that run on the 3 and the 5 minute time frame,
Okay, so you
but this is mostly meant for long-term accumulation, meant for being able to just leave it on and walk away from the computer screen and never have to look at a chart again, but you're still generating profits.
so
It's a
how
slow process, but
so
it
how do I
works.
use it? So let's say I'm not a professional trader. I just want to use a bot for the same reasons as you. I have a day job. I'm not, I just let
Yeah.
the bot do its thing. I have to customize my own settings first. How does it work? Walk me through
Oh,
the
no, no, no,
process.
no, no. No. So essentially what happens is we have everything that's built in right here in TradingView. You basically get access to this. And we teach you how to set it up. Of course, you need an account on a cryptocurrency exchange. And we recommend a couple different trading platforms to execute the trades for you. I really enjoy using All Trading, and that's working really well for me. So
Okay.
essentially what you need is your exchange, and you need a platform that's going to execute your trades based off of webhooks that it receives or alerts it's going to receive from TradingView. So you can think of it as a three-step process. You have alerts. The alerts send a trigger to the trading platform, which executes the buys and the sell orders on your exchange.
Let me just understand this right.
Mm.
Is it entirely automated? Do I still have to
Yeah.
manually input trades?
Nope. So once you set it up, you can walk away.
At,
That's
at
the
what
best
point?
part.
At what point should I manually intervene, Aaron?
Well, you're actually not supposed to.
Okay.
But there are moments, of course, when you might want to manually intervene. I understand that. But the reality is that you don't have to. I mean, that's why I love these signals so much. And that, like I said, I've been doing this since 2018. I've been doing this for 6 years. And I've had to manually intervene on many, many, many different bot trades.
Well,
And
does
the
your
beauty
bot
of these signals is that I don't have to, which is great. I just let them run. I can trust the system and it works beautifully.
doesn't the bot ever run counter to your own analysis? Let's say you think Bitcoin is going to retrace to 60,000 and still making you long. I mean, wouldn't that be an intervention time or no?
No, I mean, we could look at this run up right here. So we got 2022. What is this? September.
Yeah.
Maker is at $500 and it moves all the way up here on this run up almost 100%. Now, me as a trader, and I'm a trend trader, I'd be looking at this like, well, the trend is going to continue moving. But you notice that the signals stop and it actually stops running right here, and it doesn't turn on until we finally have a little bit of reversal, and it's prepared even for the drawdown like that, and it closes and it takes even more profit right there. So if I were to intervene and say, no, bot, turn on a signal, I actually would be high and dry right here. And this wouldn't be a good spot. Whereas if I just let the bot do its thing and trust the trading strategy, well, then it's actually going to save me a lot of grief and a lot of time and frustration holding a red bag for a month to 3 months.
Okay, interesting. Now, final question, Aaron. You said that Bitcoin is not in interesting enough for you. It's too boring, and you're trading some of these smaller alts. If a
Yeah.
critic were to say to you, "You're gambling," how would you respond to that?
Yeah, well, I would respond that trading is risk. We're always taking risks as traders and investors. There's no guarantee that Nvidia is going to go up tomorrow. There's no guarantee that the stock market will continue to go up into the right forever. So, of course, there's always inherent risk in everything. But I'm willing to risk using proper risk management strategies with the signals. So you can see here in this little table, yes, Maker is not Bitcoin. So what I would do with that is I want to make sure that I want to inch into a position. I don't want to go all into anything. Plus, I'm going to be spreading out my risk across multiple coins. So instead of just going all in on Maker, and then when I get one signal, the bot's just going to buy 100%, or rather 100% of my account to take profit. No, 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 no. It's going to scale in because it makes way more sense to slowly scale into a position, because if there's going to be negative price action, which is completely normal and should be expected in crypto, like we've seen recently, prices of lots of meme coins have dropped 20 to 50% over the last 2-3 weeks. We want to be mentally prepared for that. And if you're going all in on every single trade, you're not going to make it in crypto. You're just not. NGMI, you're not going to make it. So the beauty of DCA is that you're slowly scaling into a position and you're prepared. Your account is buoyed with USDT. So instead of your whole portfolio dragging as the price goes down, you're just slowly scaling in more and more as the price goes down. And then you sell automatically on the bounce. You don't hold thinking, oh, this is going to retrace all the way back up. No, you use the strategy because the strategy is going to take profit. Now, the thing about Bitcoin, and I've said this before to people that are using the signals and in the teaching, in the tutorial rather, I'm actually using the profits, and every single month I'm taking a percentage of my profits and I'm just using that to buy Bitcoin. Or I could use it to buy Algorand, or I could use it to buy Hex. I could use it to buy XRP, whatever I want. But the whole idea of the signals is that you can use them to generate more of your stablecoin currency so you can buy things that you like, or you can use the signals, like if I really like Maker, or if it's the market bottom, I can flick a switch and then I can actually accumulate Maker. So every single time it takes profit, it's actually just keeping that percentage profit in the Maker token. So that way I could actually yield like a 5 to 10x at the top of the next bull market. You know what I'm saying?
Yeah, and that was my next question is risk management tools. Does it have a stop loss?
No, I know, but no. I mean, again, think about this time period. November 2021, peak euphoria, all the way to the August 2023. I mean, if we just look at the chart here for Maker, I'm going to go back to 2021. It hasn't been a joyride at all. The price of Maker has dropped significantly. And we got January 2022, so just a couple months after the previous all-time high. But I mean, the signals weathered a drop of 30% here with flying colors. We have another one here where it drops again 30%. This one drops this one drops 56%. So the thing about crypto, and again, I've been doing this for many years, I've noticed that crypto is incredibly forgiving. I've spent a lot of time. This is not just a rash like, oh, let's just make this up. I've spent months working on this strategy, finding the best possible signals and the best possible settings. And it's not enough to have the best signals if you don't have good settings, and vice versa. You can have amazing settings, but terrible start signals. So I don't use a stop loss, because if I were to take a stop loss here, I've bought a lot of Maker. The price is down 50%. If I decide, you know what, right here, I'm just going to take the loss. I can't stomach it anymore. This is typical for crypto, where you sell here, price goes down a little bit, and then all of a sudden it pumps up like 500%, right? That's super normal in crypto. So the reason why I don't use a stop loss is because it severely impacts my price, or rather my profit potential in the future. Whereas it makes way more sense to be patient, to sit on my hands, to follow DCA, and to wait a week to a month for a position to close, because inevitably it's going to close in profit.
Okay. Great, Aaron. Great introduction to your work. I appreciate you being on. Let's talk about where we can find you.
Yeah, so you can find me, of course, here on YouTube. If you look for Aaron Dishner, I got lots of videos about bot trading, automated trading tools and strategies, trading psychology, all that fun stuff. I'm also on the bettertraders.com, where we have courses. You can get access to these signals, the Better Crypto signals, through the Better Traders Club, which is a monthly subscription that we have, but there's actually a ton of stuff that's included in that. And of course, I'm on X, Instagram, all over the place, but definitely I have a link tree URL, which has all my official links. There are, of course, imposters and scammers that are making it look like it's me. It ain't me. So I'll never, ever DM you first. I'll never, ever send you a, hey, how's your trading going? Want to check out my investment project? Like that never happens. I'm too busy.
You don't care about our trading results? I'm kidding. All right. Well, no, that's good. That's good to know. That's good to know. All right. We'll put the links down below, so make sure to follow Aaron there. Thank you very much for your time today.
Yeah, thank you so much, David. It's been awesome.
We'll see you again soon, and thank you for watching. Don't forget to like and subscribe.